So starting off with 91, just overall, we know with the markets and the environment, over the past year or so, the lower AUM would have placed pressure on its fees and therefore also its earnings. Apart from just the overall market levels, there's also trends of, let's say, risk off environment where funds would have shifted maybe more to money market or other preferences, and away from then your emerging markets and so forth. That would have had a further bit of pressure on AUM overall. On the valuation front, we see 91 as quite fairly priced, as the PE is close to its historic average. Just pointing out, it's a bit of a limited history. It's only been trading now for almost 4 years, so it's just slightly below that average. And then the upside to our intrinsic value is actually at the downside of 2%, so it's basically trading close to it. Then just however, if you look at the market value or the market cap of the company compared to its AUM, that's however at the low, or it's low compared to the history. Then we have a couple of risks, but the main, I would say, is more the competitive environment in my view. So that would be some of your thematic themes as a preference for passive investments and alternatives and so forth. Also pressure being placed on the on fees overall, and then the Reg 28 increase of the offshore exposure limits that could also create some structural net flow problems for the business. So apart from these competitive environment pressures, there would be some nuances, like your emerging markets, whatever would happen there in the market. So if you consider things like possibly a China slowdown and so forth. So because 91 has a bit more of an emerging market exposure compared to some other asset managers offshore. And then also some would like asset managers for the potential of markets having a bit of a bull run this year with the outlook on possible, the rate cuts that everyone is anticipating. So they are just put some caution on it. If the 91 share price would actually outperform, we just had a look at the betas compared to the JSE market, and it's a bit low, and it's not the same as your offshore asset managers where they have high betas. And also thinking about so the AUM, if markets go up, the AUM should go up, and that should drive higher revenues. However, if you just think about the cost base of 91, it's about 65% is employee remuneration, and about half of that is variable. So as the revenue goes up, the expenses should also tick up, which takes away a bit of that gearing that you would see to the market. So we have a hold recommendation which we maintain, but we're a bit on the cautious side with this hold recommendation.